Welcome to the deep dive, everyone. Today we have a really fascinating one for you. We are unpacking a massive, extremely hefty April 2026 Strategic Equity Research Report.
Oh yeah, it is a dense one.
Seriously dense. But our mission today is to completely bypass all that dry financial jargon and give you the ultimate shortcut to being well-informed on the state of the retail economy.
Right, we're doing a really detail-rich breakdown of two absolute retail titans today, which are Walmart and Home Depot.
Exactly. We're looking at everything from their basic financial health to their future predictions. But, before we even look at the individual stocks, we really have to understand the economic playing field we're dealing with right now in April 2026.
Yeah, you can't understand these companies without understanding the macro context first, because right now we are in the middle of what analysts are calling the Great Retail Divergence.
The Great Retail Divergence. I love that term. So what does the baseline data actually look like?
Well, retail sales in February 2026 just jumped 0.6% month over month.
Which brings it to what, like $738.4 billion?
Exactly. And year over year, that is a solid 3.7% increase. Plus, the national unemployment rate is just sitting at a moderate 4.4%.
Right, 4.4%. Not bad at all.
Not at all. And the National Retail Federation, the NRF, they're actually forecasting a pretty robust 4.4% annual retail sales growth for 2026.
Wow.
Yeah, which would hit about $5.6 trillion in total.
That's huge. But, the biggest catalyst for all this consumer spending is obviously that stimulus from late last year, right?
Oh, absolutely. The Working Families Tax Cut Act?
Right, the WFTCA.
Yeah.
Or, as it's nicknamed in the report, the One Big Beautiful Bill Act.
Yeah, passed in late 2025. And it has massively increased tax refunds by about 20%.
Right, so that's averaging out to roughly $3,500 per household.
Yep. Which translates to injecting about $350 billion straight into the economy.
Wow. I was reading that section, and it's like, think about it like giving the economy an energy drink while it's in the middle of running a marathon.
That's a really great analogy.
Yeah. Right. Like, consumers definitely have cash, and they are spending it, but they are being hyper-selective about exactly where they spend it.
Well, they have to be because of the inflation threat. Brent crude oil is just highly volatile right now, sitting at over $100 a barrel.
Yeah. Over $100.
And that threatens inflation across the board. So you have this great retail divergence where retailers that offer essential value are just surging.
Right. People are buying the necessity.
Exactly. While the retailers tied strictly to discretionary spending, the nice-to-haves, they are fighting much, much harder for every dollar.
Which leads us perfectly to our first stock. Because consumers being hyper-selective and looking for value means one company is benefiting massively from this inflation-driven trade-down spending.
Right, and that company is obviously Walmart.
Obviously. They are the world's largest omni-channel retailer. Yep. Over 10,500 stores.
Yeah, spread across 19 countries. It's a massive operation.
Let's talk about their fiscal year 2026 revenue shares, because the numbers are just staggering. Total revenue hit $713.2 billion.
Which is a 4.7% increase.
Right. And if you break that down, Walmart U.S. accounts for 68.6% of that.
So that's about $483 billion.
Yeah, primarily driven by grocery and their ad network. Then you have Walmart International making up 18.1%.
Right, which is $130.4 billion, largely led by Walmex in China.
Exactly. And finally, Sam's Club comes in at 13.3%, which is another $93 billion.
But the really crazy part is their e-commerce.
Right. Global e-commerce sits at around $121 billion now. That's roughly 17% of their total sales.
And in Q4 of FY26, they had a massive beat. Net sales were $190.7 billion, up 5.6%.
And global e-commerce specifically surged 24%, which, I just have to ask, how does a company that already makes over $700 billion a year manage to grow its e-commerce by 24%? It defies gravity.
It really does. But it comes down to their strategy. They are using their massive physical footprint for store-fulfilled delivery.
Right, so the stores act like mini warehouses.
Exactly.
Right.
Which drastically lowers their cost to serve. They aren't shipping items across the country. They're driving them a few miles from the local store to your house.
That's so smart.
It is. And it shows in their operating income, which grew 10.8% to $0.8 billion. It actually outpaced their sales growth.
Wow. And adjusted EPS was what, $0.74?
Yep, 74 cents.
Okay, so massive success. But with massive success comes a massive price tag. And we need to look at whether this stock is actually a good buy right now.
Right, the valuation.
Yeah, but wait, real quick, before we dive into the valuation, if you guys are enjoying this and want us to keep reading these 50-page equity reports so you don't have to, please hit subscribe, like the video, or drop a comment on our YouTube channel. It is honestly the best way to support the channel and keep these deep dives coming.
Definitely. We appreciate all the support.
Okay, so back to the valuation. Walmart is looking expensive, right?
Very. They are trading at a historically expensive 45x forward PE.
45x. That is, I mean, at 45x earnings, isn't Walmart basically priced for absolute perfection?
It is. The risks are real. With a valuation that high, even a slight miss could cause the stock to tumble.
Right. And then there's the threat of an energy shock, or like if the Iran war escalates, that raises logistics costs.
Plus the M&A integration costs from their recent moves.
Right. Which brings me to the Vizio acquisition from December 2024. Buying a TV maker. I mean, it's like they're building a toll booth right in your living room. What happens if consumers reject that?
Well, that's the core of their new investment thesis. Analysts are calling it the transition to Retail 3.0.
Retail 3.0.
Yeah. Walmart isn't just selling TVs. They are trying to monetize their 150 million weekly customers via high-margin services. They bought Vizio for its SmartCast OS.
Right, to sell ads.
Exactly, and it's working. Their global ad business grew 37%, and Walmart Connect in the U.S. was up 41%.
Wow, okay, so the ads are a huge driver. And they also had some leadership changes recently, right?
Yeah, John Furner just took over as CEO on February 1st, 2026.
Taking over from Doug McMillon.
Right. So Furner is steering this new ad-driven ship.
How does all this compare to their rivals, though, like Target or Costco?
Well, Target is trading at a value PE of 14.8.
Much lower.
Yeah, but they lack the grocery dominance that Walmart has, which brings people in the door every week.
Right, and Costco.
Costco is actually trading higher at around a 47 to 51x PE, so Walmart is positioned right in the sweet spot between them.
Interesting. So what are the predictions looking forward?
For FY27, guidance predicts net sales growth of 3.5 to 4.5%, and adjusted operating income growth of 6.0 to 8.0%.
With an EPS of $2.75 to $2.85, right?
Exactly. Plus, they announced a massive new $30 billion share repurchase program.
Wow, $30 billion. Okay, so Walmart is thriving on high-frequency, everyday purchases and this new ad revenue.
Yeah.
But what happens to the massive ticket, low-frequency purchases, the stuff tied to the housing market?
Well, that pivots us perfectly to our second stock today.
The Home Depot.
Right. The world's largest home improvement retailer.
So what's their footprint looking like?
They have 2,359 retail stores across the U.S., Canada, and Mexico, plus over 1,250 SRS Distribution locations.
And the U.S. operations are really the heavy lifter here, right? Generating about 85% of their total revenue.
Yeah. The U.S. is the core. And if you look at their revenue by product category, it's pretty evenly split.
Right, like building materials is around $53 to $57 billion.
Decor is about $52 billion.
And hardlines is roughly $48 billion. But, you know, reading the report, it sounds like Home Depot is basically running two completely different businesses inside one giant orange box.
Oh, absolutely. It's the pro versus DIY dynamic.
Right. You've got the weekend warrior buying a single gallon of paint for their bathroom.
And then the hardcore contractor out back buying 3 pallets of drywall.
Exactly. And the split there is wild. Professionals, these contractors, they make up only 5% of the customer base.
Just 5%.
But they drive about 45% of Home Depot's $132 billion in core retail sales.
It's incredible. But we should look at their recent financial health because FY25 was tough.
Yeah, FY25 sales were $164.7 billion. Which is up 3.2%, but mostly just thanks to that SRS acquisition.
Right, because comparable sales were virtually flat, just up 0.3%.
And Q4 of FY25 was actually pretty grim. Sales dropped 3.8% to $38.2 billion.
Yeah, though a lot of that was due to a 13-week versus 14-week calendar shift compared to the previous year.
True, but Q4 EPS was $2.72, and the operating margin slipped down to 12.7% from 13.5%.
Right. The financial reality of a frozen housing market is definitely hurting them.
Which brings us to their valuation and the risks. Home Depot has a PE ratio of 22.71.
And a really high debt-to-equity ratio of 3.62.
Yeah, their net debt is up to $64.5 billion now.
The bears are definitely warning about shrinking margins and just a total lack of imminent catalysts for housing recovery.
And honestly, I have to push back here on the bull case. If the housing market is practically frozen, and people are absolutely terrified of giving up their old rates for a 6% mortgage rate, why should we believe Home Depot can squeeze out up to 4.5% growth this year? I mean, aren't they basically fighting gravity?
It's a fair question. But the investment thesis actually relies on that frozen market. They call it the housing bottom and the stimulus kick.
How does that work?
Well, because of high mortgage rates, homeowners have this lock-in effect. They are choosing to remodel their current homes rather than move.
Oh, I see. So instead of buying a new house with a better kitchen, they just renovate the kitchen they have.
Exactly. And remember those $3,500 tax refunds we talked about from the WFTCA?
Right, the stimulus.
That cash is expected to directly boost hardline retail sales at places like Home Depot. People have the cash on hand to finally do that remodel.
Okay, that makes sense for the DIY side. But what about that crucial pro customer, the 5% that drives 45% of sales?
Home Depot is aggressively hunting the pro customer right now. That's why they acquired SRS Distribution, which added Mingledorff's HVAC, and they bought GMS.
Right. And they are using AI now, too, which I found fascinating in the report.
Yes, the Pro Extra digital workspace.
With the material list builder and AI blueprint takeoffs.
It's a game changer. Basically, the AI can take a complex architectural blueprint from a contractor and instantly turn it into a shopping list.
Wow. Instantly.
Yeah, it completely removes the friction. And they also introduced real-time tracking for bulky deliveries to job sites.
That is huge for contractors. But what about Lowe's? How are they reacting to this?
Well, Lowe's is much smaller. They have a $158.3 billion market cap versus Home Depot's $381.8 billion.
Okay, so less than half the size.
Right. And while Lowe's has stronger merchandising productivity right now, Home Depot is really winning that high-spend pro sector through all these massive acquisitions like SRS and GMS.
What are the actual predictions for Home Depot's future?
FY26 guidance expects total sales growth of 2.5 to 4.5% and comparable sales ranging anywhere from flat to 2.0%.
And adjusted EPS is expected to be flat to up 4%.
Yeah. The big upcoming catalyst to watch is their Q1 2027 earnings in May.
Oh, to see if the spring remodeling demand actually materialized.
Exactly. That will prove if the thesis is right.
Man, there is just so much shifting right now. But I want to leave you guys with a final provocative thought that builds on everything we've talked about today.
Let's hear it.
When you look at both Walmart and Home Depot, it's clear that data is actually becoming their most valuable product.
Absolutely.
Like whether it's Walmart tracking you through a Vizio smart TV to sell targeted ads, or Home Depot using AI to analyze a commercial contractor's proprietary blueprint physical retail is really just becoming the interface for a massive data harvesting operation.
It's kind of crazy to think about. You go in for paint or groceries and you're feeding this massive algorithm.
It's definitely something to ponder next time you're walking down those massive aisles. But as always, we have to remind you that all investments carry risk. The macro environment, especially right now in 2026, changes rapidly.
Yeah, please always do your own research before making any financial decisions.
Totally. We're just here to help you break down the reports. Thank you guys so much for joining us, and we will catch you on the next deep dive.